Central banks the world over are in a race to get inflation under control, while New Zealand's Reserve Bank may come last.
Most central banks in the world got the inflation fight wrong. So I think the Reserve Bank here was not alone in mistaking what was happening. It is likely that New Zealand will find itself in a situation where monetary policy will need to stimulate growth, but not have the mandate to do so.
It's Monday, the 26th of February, and you're watching Markets with Madison. Between 2 and 3%. That's the target range for inflation that every Western central bank is aiming for right now. Economies like Canada's are already there, but we're still a way off. Inflation is the bane of every central bank right now, as our Governor Adrian Orr made clear in a speech last week. He was among the first to start hiking interest rates in late 2021, when inflation spiralled out of control during the pandemic stimulus situation. The Fed followed suit in 2022, stopping around the same point of 5.5%. Plenty of economists are picking we'll start to see cuts to those high rates later this year, because inflation is coming under some control. The US is now around 3%. Europe and Canada are at 2.9%. The UK is 4% and Australia just over. New Zealand is losing the race, with inflation still closer to 5%, meaning we may be the last to get any rate relief. ANZ is now forecasting more hikes to the official cash rate here, while BNZ thinks we'll stay where we are for longer. Chief economist at Aurora Macro Strategies in New York, Dimitris Valatsas, was in New Zealand this month. He sees many differences between us and the Fed. Well, Dimitris, thank you so much for your time. It's lovely to have you in New Zealand.
My pleasure. Thank you for having me.
Let's talk about domestic central banks first. We are going to talk about big ones like the ECB and the Fed, but focusing on little old New Zealand, do our central banks matter in the grand scheme of things?
Well, of course they do. You know, New Zealand has its own currency, it has monetary sovereignty, its mortgages are tied to the central bank rate, so there's a huge impact on the economy depending on what the central bank does. But of course, New Zealand is not alone in the world. There is a global rate cycle going on. Monetary policy, as I'm sure you've seen, has been pretty coordinated around the world during this latest inflationary wave. So of course what the Reserve Bank does here matters a lot. But it has to be seen in the context of what's going on in the world, particularly in the United States, which is obviously the main central bank in the dollar system that we have.
I do want to talk to you about the Fed a little bit later on. A lot of people here, though, have been pointing the finger at our Reserve Bank of New Zealand for not reading inflation right and being too reactive rather than proactive to that global trend. What do you think? Have we got the inflation fight right?
I think, look, most central banks in the world got the inflation fight wrong over the past few years. There are many good reasons why that happened. Inflation hadn't been seen in almost 3 decades, at least serious 70s style inflation. So I think the Reserve Bank here was not alone in mistaking what was happening and being too late to react. In fact, I think it was one of the best central banks in its speed of reaction among developed economies. But it failed in many of the same ways that most other major central banks did, including the Bank of England, the European Central Bank, Reserve Bank of Australia, and the Fed.
We love to pin the blame on someone or something in this country. So whose fault is inflation, really?
It depends on the country. I mean, I think what's important to note is it has been a global phenomenon. So we have to think that at least a large part of that was supply-side driven. Had to do with COVID. COVID was a very unusual economic development in that all economies shut down at the same time and then they picked up at the same time. That doesn't usually happen. Usually you have the US running a little bit ahead of the EU and New Zealand growing or growing less. So you have acceleration and deceleration globally that counteracts each other. COVID was very different. Demand picked up everywhere at the same time and strained supply chains that already had operational difficulties. So I think a big part of the picture has to be on the supply side. On the demand side as well, most countries had some support, fiscal in nature and monetary, to the domestic economies to counteract the effects of shutting down the economy for COVID. So I'd say it's both. supply and demand side, it's hard to pin the blame on one particular authority, one particular policymaker. And I think, again, it's important to think about how this played out globally. It played out in most places. And it would be remiss not to add that the Russian invasion of Ukraine also had a big impact at a time when inflation expectations were already picking up and inflation was already heading out of control. So it was an extra shock that affected everyone.
As you mentioned, the global response from central banks to that COVID mostly caused inflation was to all hike, and they roughly all did it at the same time. We were first in New Zealand, but then everyone followed suit roughly to the same degree as well. But what happens now? Do they diverge? Do we start to see central banks in different countries responding differently?
I think so. I think that's a rational expectation. Inflation has taken many different forms in many different countries. The United States will probably start cutting rates later this year. The European Central Bank will probably follow suit, and I'm sure the Reserve Bank of New Zealand won't be too late to follow as well. It is, as I mentioned before, a global cycle. The pace will diverge, and it's not clear that all central banks will end at the same place or go back to where they began. But I think with the exception of the Bank of Japan, which has followed its own path throughout this whole rate cycle, most banks will be heading downwards.
Who sets the tone here? Is everyone going to just be eyeing and following the Fed, do you think?
I think every central bank, follows its domestic inflation, but obviously there is a global rate cycle. Treasuries markets tend to follow the Fed, and international treasury markets, including Australia and New Zealand, react very closely to what happens in the United States. So I think it's especially important to pay attention to what happens in DC.
You think the Fed's probably going to cut this year? How much? How many times? One? None? What do you think?
I think, look, it's a matter of contention, obviously, and given the inflation figures we saw yesterday, it's clear the inflation fight is not over. The central bank, especially in an election year, would not want to have to do a U-turn and hike rates right before the election. So I think they'll take their time. We'll probably head into the second quarter, but I think they'll start cutting then. The intellectual framework for cuts is very clear. It's made very clear by many Fed speakers. And I would expect anywhere between 100 and 125 basis points of cuts this year, spread across the second half.
How important do you think that economic story and what happens with rates means for equity markets? Is it still everything?
I think it's a large part of what drives equity markets, at least on a day-by-day basis. We saw that yesterday. At the same time, I think it's worth remembering that equity markets have been doing very well, regardless of what happened to central banks, and they've recovered fully from the central bank hikes. So in the short term, yes, that is the main reaction function. But over the longer run, it really depends on economic stability, on the outlook for the U.S. and global economies, and what we're seeing in productivity, which is driving, obviously, all the tech equities higher.
Is there any major difference that you see in the rate cycle and what happens with the Fed compared to in New Zealand? Is there anything that makes us quite at odds with your great country?
Well, look, I think mostly New Zealand has been following the rate cycle. What I found interesting from my visit here is how politicized monetary policy has become in a way that it is threatened to become in the United States, but hasn't become yet. The current administration has been very careful not to interfere with the Fed's job in a very aggressive hiking cycle. My understanding is that both here and in Australia, the issue has been much more politicized, and the government has been rather active in setting the direction of the Reserve Bank.
What do you think about our mandate? We've gone from a dual back to a single. Was that the right call?
Well, it's interesting. Obviously, it's a political issue, and many jurisdictions take a different approach. Now, I'm European, and we have a single mandate in Europe. I wouldn't really recommend it to anyone. I was quite astonished that following the European experience of the past 20 years, anyone would want to go down that path. And the main issue with a single mandate is that the bank doesn't have the flexibility to adapt to economic conditions. Sometimes when you have a supply shock, for example, the wise thing to do is to not pay attention to inflation and pay attention to unemployment. And that is a judgment call that central bankers are trained and employed to make. When you limit their ability to do that, I think you limit the policy room that they have to counteract negative developments in growth.
So it sounds like you're saying we've just limited the already limited power of our central bank.
I think that's right, or at least limited its ability to react to specific types of shock that might affect inflation in the short run, but affect growth over the long run. And my expectation would be that over the next few years, it is likely that New Zealand will find itself in a situation where monetary policy will need to stimulate growth, but not have the mandate to do so.
Don't forget, Wednesday this week, February 28th, the Reserve Bank's first rate call of the year. Let me know what you think they might do. Hike, hold, or cut. Now go put your money to work. Thanks for watching Markets with Madison, the New Zealand Herald show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.